time, yeah, right, with the zones, because I don't like to have my chart fucking cluttered. And what the hell is the point in having a zone which the first above the zone that hasn't even been tapped yet marked up, when you don't even know how the market's pushed to the first bloody zone? It's just, yeah, it doesn't make any sense. And what you would be analysing is the intent behind the way the bars are formed, like, and the overall configuration of each of the bars comprised were in the consecutive push to the upside, whereby market participants had maintained the same sort of intent over over running time periods in a row, the same time periods running in a row, and that same sort of intent. That's a trend, that's a pattern in behaviour, but our participants trading in that way, and you track how long that unfolds for on the basis of how those bars form, like, because those bars are made up of the intent and conviction participants have, right? So, yeah. Anyway, I was also looking for. I'm also looking at in my spare time, which I don't really have much of, but I do sometimes. I've been looking at the markets which I can't. I'll look for a specific setup to unfold, and that is Asia high or Asia low. But to go on side with that Asia high, Asia low sweep, sweep, in a key time period, I will the time or like assessing each the way participants trade, like over each of the time frames I look at, up to the most recent bar close that closes at or just before the key time period, whether that's USAM or EUAM modern trading session, and see how that intent exhibited has contributed to the way the pushes are set up, like as of that time, and how participants are willing to trade, like over the time periods I look at as of that time. So anyway, as you see in the monthly, you got high time is here, so you've just got one big external push to the downside. So this is kind of like a continuation hypothetically then. So you got and then the at-hand pushes you've got like within the external at-hand push, you got this, you got this, you got this, you got this, you got this. So this is your external. No, this is your possibly turn to the upside. Anyway, we are spending a lot of time on this weekly chart. I'm not going to bother looking at this because it closed on Friday. The way this is set up, it looks easy to push higher. But I want to assess how the market's set up today. You know, I want to assess the intent that's been exhibited most recently. So basically, the bars that have closed on Monday, as of Monday, blah blah. So you see this, you kind of got a decent push to the upside comprised of consecutive time periods whereby market participants were seen to have maintained the same intent to trade for, like which is like it's a sufficient amount of time periods relative to how many time periods previously participants are seen to have maintained a certain consistent repeated type of intent over a certain time period, you know, just based on this like short-term shit basically. And then you've got like it's kind of short-term structure, to be fair, because if you track the way that the bars actually formed, like, you know, you've got like a short-term push higher, you got a trade lower like this, short-term push lower, and then you kind of got this bullish push higher, and then you kind of got this weak rejection. This is in iffy territory based on the overall 3-day push and the short-term structure, because this kind of looks a bit bearish. So if they just quickly look at scanning the 2-day, I'm not going to spend too much time on it. Okay, so it did close. So yeah, this does look bearish, and I would track the short-term structure, to be fair. Which relative to short-term structure, you're trading above the previous at-hand pushes range high. External at-hand push structure, you are visual 2-day. I swear I made a. I'm pretty damn sure I made a 2-day at-hand push. Anyway, yeah, so you must be aware of where you're trading within that external push too, but you're also ultimately considering where amongst the actual at-hand pushes, and those at-hand pushes can, like, you also discern what they are too. Like, is it just standard at-hand push, or is it a short-term push, or is it short-term push like SST, or is it just ST? So this is based on the way participants traded like. Now this looks primed to keep pushing lower, but we must also keep the context of how the higher time frames are set up in our minds. And yeah, because the 4-day is pretty bullish, the weekly is pretty bullish, But ignore this bar. Okay, yeah, so look at that. Oh, it's pretty bullish. So you basically just, this bar is like formed here. So like, yeah, that looks pretty bullish to take the high, to be fair. But, and then also the context from how the higher time frame intent set up, like, yeah, like, look at this. This looks pretty good to go higher, to be fair. Regardless of the daily and 2-day intent unfolding the way it has done. Ultimately, this is to be confirmed, though. Yeah, look at the 8-hour push to the downside while higher time frames are set up the way they are. It has a suitable candle quantity push to the downside, like whereby market, like for classifying intent to trade on a certain side of the market as being overextended. Like when the higher time frames are so bullish, you know, if participants have maintained the same sort of intent, what's facilitated lower prices over like 1, 2, 3, 4, about 4 time periods lower. I know it's kind of basically 3, isn't it? But just where it's set up like this, you know, like look how they've been trading. Like they haven't been trading that ferociously or that with that much conviction applied to the best bid, really. And then especially when the high time frames are clearly set up so bullish, like factually, like that intent to trade exhibited and how it's literally printed the way that the bars formed, like, or dictated the way the bars formed, like, that sort of intent. Oh god. There was just horses outside my house and literally looked like it was gonna leap the girl off. Anyway, yeah, the way that intent has contributed to the structure of the way the at-hand push is set up in play, and where that at-hand push relative to weekly, the reality of those prices that it's trading at, aka at the lows of a very overextended weekly push to the downside, is still trading at that region of prices where participants have displayed and demonstrated their intent now is no longer of the sort to continue trading with those prices in the same way as they recently were. Right, so the prices are sat at a cheap region, which paired up with bullish conviction. So you don't really want to be short on that, especially at the lows of a push to the downside that looks done, dear. So which is not retraced yet either. It's still in early days. So when you've got a push like this, which also looks done and primed to take the high, which the POI/objective for the week, that 8-hour push would be that high, but obviously this is subject to change. I've kind of closed my eyes there when I looked, before I looked at the 4-hour, just so I would completely solidify what it was I was going to say in my head. And what I was going to say was, like, this is subject to be verified with the way how next step lower time frame is set up, which is needed because of how the 2-day intent and daily intent set up, right? You're at the highs of a push to the upside, which is kind of set up done based on the way daily intent trades unfolded, like, but you have to consider how the higher time frame intent above that is structured, whilst this now intent to trade is unfolding the way it is now too, and where the reality of the prices that the market's situated at exists as, or situated at, like where it's situated at relative to the context of how the weekly intent to trades evolved. Like, now look at the 4-hour. You do not want to short this. Now, hang on. So this is like one straight bar. So picture this bar just within this, and you're just seeing this. So you would basically be just seeing that. So yeah, this looks a bit deceiving. Where, like, if you just go to the 4-hour here, you'll be able to see what I mean. Like on the futures chart, yeah, it does actually. So it's just a bit more pronounced and defined on here. Anyway, when you look at this would be your short-term at-hand push to the upside, which would be the at-hand push and play. Push to the downside looks kind of done. The way that participants traded, like, compared to the amount of time that participants maintained the intent here for, it's the same amount of time. And the way they traded, like, was of the fashion that they were no longer willing to trade in that way, coinciding with the overextendedness of this intent in this region, of this region of confined time, this region of confined space/time of the market participants what were trading in this region when they'd maintained the intent to trade for this period of time relative to here. And then the way they started to trade, like, it made sense that, okay, yeah, this is probably done, and then the way that this bar closed, like, it's confirmed that the reality of the way that this bar's made up, like, would have to be verified with how next step lower time frames are set up, like, just a hollow tree scenario, where, like, you want to see the structure, what's actually comprised in this, and whether it's actually strong, and whether it's actually going to hold up, you know. And anyway, you get this, and this kind of verifies it, but you also have to acknowledge that relative to the at-hand push 4 hour leg, 4 hour time intervals, that's subsequently going to ensue and evolve over, like, the next 4 hours, the reality of the prices that participants are trading at is expensive, so you want to keep that in mind. But the way that the 8 hour setup, the way the 16 hour setup, the way the 12 setup, I wouldn't really stress that. But we don't buy the highs of the at-hand pushes to the upside. The 2 hour, we see that the 4 hour, what I was just talking about, in a bit more of a granular light or perspective. And hang on. And we see that on the 2 hour a lot more better, and we would not want to buy the highs here. Although it's likely to do what it's doing now and analyze the chart as before, like as of the key time period. I don't give a shit about what happens here. I want to see how the chart's set up as of 3. That's what I care about. Dissecting how the intent to trade has unfolded and been exhibited, and what sort of intent that has been up to 3. And however that's set up, like, in that interest shown. And anyway, I don't give a shit about what happens after. So anyway, you see that the way participants are trading, like, in this in. So to mitigate that, what we'll do is what we'll be doing is this 4 hour leg is actually the suitable 1 hour or rather the appropriate 1 hour at hand push leg, which we would be waiting for. I'm just to make that clear when I go to the gym, just so I'm looking and I'm like, yeah, okay, the 1 hour appropriate leg is the same. Just color code it. That's what I do. So that's like the 12, that's the 1, that's the 4. And anyway, I've done that for a while. And then that's the 8. And then my zones, Sarah. And so what I'd want to see is, I would want to see a retrace from 3 o'clock to here. And I would only, based on the 2-day and daily, in fact, the iffiness of the situation, the iffiness of the price direction poised to prevail, it is a bit iffy, to be fair, considering how the daily and 2-day set up. So you would want to see a 1 hour nice bar close at this region, and which would also coincide with below this low in this nice key area. It just looks good, to be fair. Like, look at this, like, nice consolidation zone right here, you know. Anyway, yeah, that's what I'm looking for. It probably isn't going to unfold, so yeah. And as of the morning, ooh, shit, we might have missed a win today. I guess I'll make a new video going over European and morning trading session. But first, what I'll do is I'll have a look at the Dow. What I was looking for before this chart unfolds was a 15M nice bar close as of 3. I wanted to just say that so quick, just so, like, you know, I'm not BSing or capping, you know, because, like, I do everything in advance. I form my decision, like, in real time conditions. That's the nature of my approach, you know. Anyway, what I was looking for was a nice 15M bar close just off the bat, with a playable range. And this is quite shit price action. To be fair, I left. Would you want your stop loss at this region? Where's your stop loss situated at relative to the zones? What are active? It's right below a key zone. You'd want your stop loss about there. Stop loss there. 1-1. Bam. So yeah.